on TuneIn, iHeart, and on Odyssey. Now, from the Signature Bank Studios, this is Chicago's Morning Answer with Dan Proft and Amy Jacobson. America First with Sebastian Gorka, today at 3, right before Sean Thompson at 4 on AM 560. The Answer.
Dan and Amy, we were talking about Ocean Gate and that submersible that's stuck apparently in or around the Titanic wreckage at the bottom of the sea.
Yeah.
So this former ABC science editor, Michael Guillen, he had a similar experience apparently in 2000. So it can't be Ocean Gate because the company wasn't founded then. Yeah, but he took a submersible to the Titanic wreckage. And that's right, 2000. So he took this submersible, and I guess it started to trend toward one of the Titanic's propellers, and it got stuck. Became wedged under the stern. The crew tried to reverse out, at which point a bang was heard, and chunks of debris were seen floating through the water. That's not a good feeling. And then the team eventually managed to free the sub, get it back to the surface, but he describes this as, almost
life-threatening.
Yeah, it was a submersible called the Mir 1, which was built in 1987, and that was 2000. So, maybe there's something similar to what happened there that's happening now. I don't know, and I don't know if anybody can, if you can free them from above, or they need to somehow free themselves, like happened on the submersible that Guillen was on. But anyway, I just thought that was interesting, some additional perspective at the same site. More on this, more on the...
Yeah, he's an oceanographer, isn't he?
Adventures.
Don't we have him on?
We'll see about adventurism and risk-taking. It's risk-taking. It's a conversation about risk-taking. That's what Jim Iuorio does in the markets, and operating a business in Illinois. That's even a more severe risk than going to see the Titanic wreckage. Jim Iuorio is the host of the Futures Edge podcast. You see him on Fox Business as an analyst often as well. Jim, thanks for joining us. Appreciate it.
Thanks for having me. And to Amy's point, to think that I need to actually know something about a topic, act like I know something about a topic. Come on, you know me. What do you got?
Yeah, right. So, all right. So this is the question everybody is getting asked. Would you take a submersible to the Titanic wreckage to see if you could find Leonardo DiCaprio?
He's done that? No, I would pay the amount that they paid to opt out of going that far.
Thank you.
It sounds absolutely terrifying to me. And so does space, for that matter, too. Like, I don't understand these people. And again, this is a horrible story. And as far as, like, taxpayer money going to rescue them, I'd gladly put money myself. I'm not sure if I could commit the whole country's money to it, but I'd gladly. This is a horrible story. That being said, this is ridiculous. And these people who want to live the adventurer life, I mean, they're taking risks. They want to have this story to tell, and I'm sorry that this is not proper risk mitigation built into this whole thing too. But then again, prayers and whatever sent to them, it seems like a horrible thing to do. But never in a million years would I be doing something.
Would you do it for $10 million?
Sure, if I could then I'd have to do some studying on the risks of it, but probably, I do like money, and I don't know if they do these things all the time. Like, I'd certainly jump out of a plane 10 times for $10 million. I know people who do that. It doesn't seem like the risk is there that much. But again, it's like, options trading. The example they always use is, would you put this blindfold on and run across this street? If you know full well that usually at this time there's almost no traffic on this street, would you do it for $100? Of course not. And then you just keep amping it up. Again, your life.
Thank you for this tutorial in the elasticity of demand. Yes,
exactly.
Most of our listeners, fortunately, have taken the kind of 101 course, so they're familiar with the concept. And also, we all learned in kindergarten, behold the turtle. He makes progress only when he sticks his neck out, Jim Iuorio. So
it's true.
Yeah,
it's true. You have to take some risk in life, but that's an unnecessary risk in life.
Remember that. Well, yeah, says you. All right, so let's talk a little bit about the markets and what is necessary risk these days as inflation has started to retrace back to the 2% goal, and the pause is on, and we've had a rally the last 5 weeks, so things are looking good? Question.
No, I wouldn't say good yet. I think we're still in hot water, less of hot water than many other countries are. I don't know if you guys saw just this morning, both Norway and the Bank of England surprised by hiking rates by 50 basis points, surprised the market. The market didn't think they'd be that aggressive. But it speaks to the psychology of the central bankers when they get frustrated. And it also speaks to the idiocy of their only tool, which has a variable and lag effect. So what they're doing right now to fight inflation today is raising rates that will only affect the market 6 to 9 months from now. So I just told that story just to see how reactionary and somewhat stupid central bankers are. Now come to our central bankers, where Jay Powell keeps talking about, no, we're going 25, we might go 50. We're gonna tighten until we crack everything down. So the point I try to make is that if he had no intention of hiking any more rates, he'd still say he did, because he wants to have control of further end rates moving. And if he said today that we're on a pause, we're on a break, we're not doing anything anymore, the market would celebrate more than he's willing to. Like, so what I'm saying is, don't listen to a word he's saying. That being said, I think the stock market now, because his motivation is that no matter what he thought, he would say the same thing. So it's kind of silly. The Fed transparency thing just doesn't work at all. But I think the stock market, there's a couple other factors coming in that are liquidity issues that I think could bring the stock market down, 5 to 10% in the next maybe month before it starts higher again.
No. Well, detail. That's don't bury the lead there. We want details.
Go a little bit into the weeds here, but so when the debt ceiling thing passed, so the Fed's been drawing down its account balance. I mean, the Treasury's been drawing down its account balance at the Fed and kind of spending it all. So now they're going to be issuing bonds without increasing their spending, which means that kind of takes money out of the general market, because people buy those bonds, banks buy those bonds, so there's less money out there. Now you're throwing in the minor issue of starting the student loan repayment things up again, which should have been done a year and a half ago. The fact that it wasn't is so asinine, it's maddening. The federal government seems to the whole time being trying to subvert the fight against inflation. So now doing it when the economy is kind of teetering anyway is actually it always should be done from a moral and ethical standpoint, but right now is the worst possible time to start the payments again. So, but anyway, those two things, in my opinion, and the student loan thing to a much lesser extent, obviously, are going to take liquidity out of the system, and some of that liquidity used to end up in risk assets. So now I think risk assets will come down a bit. Does that make sense?
It does.
It does. But the student loan, I got to tell you, I know people who are so excited, like, I don't have to pay my student loan back, and I just went, well, we're going to be paying for your student loan if it goes through, but I don't think it's going to. I think the U.S. Supreme Court. How do you think they're going to rule on that?
I think they're going to rule that people have to pay their student loans back. It's still the one sensible body we have, and not even really sensible, is the Supreme Court. So I think that they're going to, and again, I don't think the Democrats really genuinely want to pay off everyone's student loan. What they want to do is be able to dangle it out there before every election. Remember, last
they
election,
paid for votes.
Oh yeah, they're not going to do it. I mean, three anonymous Democratic senators said this is a problem that's much better left unsolved, because they will keep promising it and promising it. Wasn't it like 2 or 3 days after the election last time where they threw their hands up and said, the court just decided we can't do it. You guys are out of luck. Thanks for voting for us, though.
Yeah, I know. It stirred up their base. They were so excited.
So Bitcoin's hot again.
Oh, yes.
So a crypto exchange backed by Citadel, Fidelity, Schwab is getting up and running, and Bitcoin is surging to last I checked, around 29 grand. Why?
This is interesting. Is that just like you said? So just in the last week and a half ago, it was plumbing the 3-month lows because our SEC was coming down on Binance and Coinbase, and the talk was regulating crypto assets. So anyway, the Bitcoin enthusiasts, the whack job, diamond hands, whatever they call themselves, they've always said that regulation is fine because it validates crypto and it makes it less scary for people to invest. And then literally within the next couple of days, and not just Fidelity, Schwab, Exchange you're talking about too, also BlackRock and WisdomTree re-upping their desire to have a Bitcoin ETF, which, by the way, I hate to be a spoiler here, BlackRock's permit's going to be improved, and they're going to get the ETF because basically they bought the government fair and square. I'm not sure if I can say that. Am I going to get in trouble for saying that? But it's true. So BlackRock's going to get the ETF. But all these big blue blood companies that are increasing their exposure to Bitcoin and crypto assets, I think is what's pushing it higher. And within the space, Bitcoin has jumped to almost 50% of the total market cap within the whole crypto space. So to me, it's like someone is winning this crypto race, and it's Bitcoin, and that's probably because of the adoption of more conservative, established companies coming into the space.
Well, as noxious as Larry Fink and BlackRock are, if that's true that BlackRock is going to get the ETF they want, then it's time to buy Bitcoin, isn't it?
Well, I think so, yes. And I'm not one of the crazies, and I do own Bitcoin, and I don't 100% understand Bitcoin, but as we established earlier, I don't need to totally understand something to speak like I understand something.
Right.
But the reality of it is, it does seem to be a hedge against profligate spending, against poor stewardship of our currency, and these are things that I've been railing about for 20 years, that just the people who are in control of our currency have zero respect for our currency. And same with other central banks and fiat currencies in general.
Although
so to have something that...
Well, although I guess there's some. I don't know if you're tracking it, but I guess there's some divergence. But Bitcoin was initially touted as a hedge against inflation, which is sort of a proxy for profligate government spending, but it sort of mirrored. It sort of tracked the S&P, didn't it? So it didn't seem like it was much of one.
Right. Even more so, it tracked the NASDAQ. But I think this was a weird function of the way it was traded. And at huge hedge funds around the world, it seemed like it just kind of was moved over to the risk asset trading desk. So the same people who were trading NASDAQ and had positions as Bitcoin. So it adopted a really strong correlation to the NASDAQ that, as you say, was somewhat inexplicable unless you were saying that the same whole group of traders and all the algos were like, if this rallies, and then correlation kind of builds on itself within that before. It doesn't matter if it's stupid. It's just that people just traded them together.
Yeah. No, that makes sense. But okay, well, that's very interesting. By the way, just on BlackRock, since James O'Keefe had this one of his guerrilla exposés where he got some recruiter, and he's like probably a mid-level flunky over there. But he was saying, big talking. I think it probably was one of these things like with Pfizer, where one of his undercover reporters, presented herself as like a date to this guy, and so he opened up, and he's being braggadocious and so forth. But he did say, speaking of what you just said, basically the same thing, that it doesn't matter who the president is; it matters who controls the president's wallets, and basically that's us and a couple of hedge funds. I mean, the truth of the underlying statement, separating out some of the other nonsense, that you've got 3 or 4 big players that basically control financial services and, to a large extent, are driving our politics, with Larry Fink being the lead on ESG. I mean, that is a real concentration of power concern, isn't it?
Oh, I think it's enormous. There was an exchange I had yesterday when I was talking with some people on Twitter, some high-level economic source, and I said that the thing that worried me the most, I'm not trying to just switch it over to Bud and Target because it all comes together. The Bud and Target thing, the thing that struck me as the most scary is that they embarked on these new marketing campaigns not to curry favor with their customers at all. They probably knew it was terrible for their customer base. They were trying to curry favor with the government. That should scare the hell out of all of us. Like, there's some lists being made with social credit scores, and I mentioned ESG, and someone comes back and said, well, ESG isn't the government, it's BlackRock and Vanguard. And I said, wait, are you telling me that BlackRock and Vanguard, do they sell the government now, or do they still own it? So, I mean, he was like, oh, yeah, good point. So, again, it's all the same entity. Like you said, and then the one thing, when everyone screams about wealth inequality and this and that, it's nonsense. We need wealth inequality in a dynamic economy. But when the power is concentrated so specifically, this is pretty terrifying. And this is one thing I'm not going to pretend I know the answer to, but there is no question that BlackRock, Vanguard, the pharma industry, they give money to the media, they give money to government. It's all one entity, in my opinion, now, and that's something that keeps me up at night.
Jim Iuorio is a regular analyst on Fox Business and the host of the Future's Edge podcast. Jim, thanks as always. Appreciate it.
Thank you for having me, guys.
Thank you. And he joined us on our turnkey.pro answer line.
The more you listen, the more you'll know. This is Chicago's Morning Answer. On AM 560.